Hey, what's up, everybody? You know, we often get asked what is title insurance when it comes to working in a real estate transaction, and that is the topic that we are going to cover right now. Hey, what's up, everybody? It is Mark Hubert with My Front Range Living, powered by RE/MAX Integrity. I am a full-time real estate agent here in Colorado Springs, Colorado, and today we are going to talk about what title insurance is and how it can impact your transaction in real estate. And with us today is the expert, Cody Nottingham.
What's up, guys? Cody Nottingham.
Cody Nottingham is with Fidelity National Insurance, Fidelity National Title.
That's why I do the intros, because I know what I do. I'm an account manager for Fidelity National Title.
Buddy, thanks for coming on. I appreciate you so much. So, I've worked with Cody basically since I've been in the industry, and he has a fantastic team here at Fidelity. As a matter of fact, I just talked with Crystal, and I get to come see Kelly on Monday. They do a rock star job with all of our title needs. And so, buddy, I kind of wanted to get with you because on every single transaction that we do, there's title insurance and there's this and there's that. So tell me, what is it? What is title insurance?
I don't know about you, but I'm sure there's lots of people out there that grew up wanting to be a title rep. And for me, that wasn't the case. So when I interviewed for this job, I go, title insurance? What is title insurance? And I can assure you, no matter how much you Google, you will not understand what title insurance is.
That's true.
My division president knew that, and he still hired me. Thanks, boss. But what I have found out is that for me, the best way to explain something is something that you guys already understand.
Okay.
And what I've used in the past is car insurance.
Right.
Now, we understand that with car insurance, we can be driving down the road and maybe we are T-boned in the middle of an intersection. Obviously, it's not something that wasn't our fault. We had no idea it was coming, but guess what? That's what insurance is for. It is there to protect you. Car insurance works that it protects you from anything that could be happening in the future.
Okay.
Title insurance is going to be, instead of your car, it's going to be your property or your land, something that you own.
Okay.
And what it is we're protecting that you own the land going back in time. And what we call that is a chain of title. Okay. So our insurance is saying that, hey, we've looked at this chain and your chain is strong and we don't have anything that we need to fix. Sometimes there are broken chains of titles.
All right. And
that's where we can see a potential issue. Now, one thing a title company can do, just like any insurance company, is give you coverage with an exception.
All right. Yep.
Hey, I'll cover this except if you get blasted in an intersection, that's your fault.
Right.
That's not what we want.
So basically what you're doing is, especially with the hail that's been going on right now, you're going back and you're saying, hey, there are no liens against this property. You are going to own this property. It's yours. There's no roofer out there saying they haven't been paid. There's no contractor that says they have a stake in the home because they haven't been paid for something. You're going back to make sure that there are no liens out there on that property.
There's no liens on that property. What we're also looking back is public records. Sometimes there's children that we didn't know from beneficiaries or what may. There's all sorts of different things that you guys don't think about that I get these lovely phone calls and I get to learn about. And it's really fun and it's exciting, but then we get to come and do this together. But so what we're doing is there's all sorts of different ways to break that chain of title. And liens are the most common one. Oftentimes those liens, so what happens if you don't know what a lien is like Mark was saying, say a contractor goes and works on your house and you have a $2,500 bill that wasn't paid. That contractor goes down to your county and files a lien against you and your property, so it is recorded in the county. Now, there's actually often times where it comes up as a broken chain, but guess what? You pay that $2,500 and they forgot to what's called release that lien. So it still shows, but all we need to do is you call me, I go down to the company, get the receipt, and I go back down to the county. Now that chain, that lien is released and that chain is closed and we don't have to worry about it anymore.
That's pretty awesome.
Right?
So you guys provide a pretty awesome service. So the other question that comes along with that is everybody wants to say, well, how much does it cost? What is this going to cost me? So on and so forth. And I have found that there's no one set answer. It's pretty transactional. It depends upon the transaction.
100%. And in Colorado, we are regulated by the Department of Insurance and Department of Regulatory Agencies and DORA. So a lot of us are gauged on our pricings. The way that each title company can break it down will vary. What it is your title commitment, which is your actual policy, is going to be a percentage of the sale of the home. Your closing costs, now those, just like anything in real estate, are negotiable, right? So depending on what those closing costs could be, there's things that's called an owner's extended coverage, which I will tell you, if you've watched this video this far, you're getting owner's extended coverage, okay? It's worth it. Do it. Normally for us it's $75, but what it does is it removes the first 4 exceptions from the exception paperwork.
Oh, worth it.
Totally worth it. Because guess what's included on the first one? Liens.
There you go. Yep, makes all the. Okay, so those costs are.
They vary. They vary by price based on the sale of the home, and then closing costs and such are negotiable. What I will say is standard or normal practices are splitting those closing costs. Right. Here at Fidelity, it's $280. What we often see is $140 to each side.
And that's where I would hop in and say, as the agent, that's our responsibility in writing the contract in the section that covers title and commitment and insurance and everything else like that. It typically says 1/2 buyer, 1/2 seller.
And that's just for the closing costs. The commitment is normally paid for by the seller.
Right.
And that's why in Colorado, they're often directed, or who chooses to work with us is the actual seller of those homes.
Right. So, and one thing to clarify is...
Now, wait, time out, because now I have to sell. Now, if you really like us and you're a buyer and you want to come and work at Fidelity Title, guess what? There's nothing that says this guy can't negotiate that you use us and they still pay for it.
True story. I could absolutely do that because they're worth it. The other thing, too, is you talk about closing costs and so on and so forth being dependent. And a lot of people have this tendency to think that title and the title closing costs are closing costs. But what you're talking about is the closing costs from the lender, correct?
Yes.
Right. So those are 2 very different closing costs.
So we're kind of in a real estate transaction, for my nerds out there, the lender and title company are Gandalf. You are not getting past us, okay? So we have to work very closely together to understand, and certain gates lead to the next one, and hopefully we're not being thrown into a volcano.
My precious.
So anyway, we're going to be done nerding out. Hey, once again, everybody, this is Cody Nottingham with Fidelity National, and I appreciate you, dude. Thank you so much. You're a rock star.
Thank you, Mark.
Hey, if we can help out in any way, please let us know. As always, we hope you found value in the content today. I am Mark Hubert with My Front Range Living, powered by RE/MAX Integrity. Thanks for stopping in. Hope you have a great day. We'll see you soon. Bye.